So it's time for SoFi's earnings call next week, and man, am I excited for the call because we got the perfect scenario coming into earnings this time around, and it's beautiful. So let's talk about that, and more importantly, what matters on this earnings call for SoFi stock. And I'll give you my exact plan for SoFi, but I got a big warning for you guys too, because of course, Wall Street is looking to absolutely screw you when it comes to SoFi stock, so we'll talk about that as well. Just make sure you like the video if you like getting the truth without the hype. Okay, so we got the perfect setup coming out of last earnings, coming into this earnings right here, and that is simply you have last quarter where you have profitability, you have great earnings, great guidance, great everything all the way around, and Wall Street just completely tanks the stock. That is the perfect setup for a long-term buy and hold investor. Basically, what you're seeing is the company fundamentals going up while the stock price is going down, which is the best setup and how you make the most amount of money in the stock market. And it doesn't happen too often, but that's exactly what we have coming into this earnings call right here, is that exact setup, which of course means I've been buying like crazy in my main portfolios in regards to SoFi stock because I have the perfect scenario as a long-term buy and hold investor. But I know some of you guys out there are newer investors and you're kind of wondering, hey, as a newer investor, is SoFi the kind of stock that I would add to a newer portfolio for somebody who doesn't have a large portfolio already built out? For somebody who's just beginning, is SoFi a stock that you would add to kind of kick off that growth in that portfolio? Well, you can actually see if I added SoFi last Friday and I got another round of buys coming this Friday, in my $250 legacy portfolio challenge, where I'm basically starting from zero, exactly like a lot of you guys are out there, and build it out into a six-figure portfolio and beyond, so you can see exactly, is SoFi the type stock I would put in there or not? And you can access all that information for $15 underneath our new founders tier that there are limited spots to, guys. So when they're done, and the price goes back up to normal. But for the founders, for those initial folks that jump in on there, you can see me start this $250 portfolio challenge from scratch. From day one, see exactly what stocks I add to it. I'm doing everything on Friday there, so we got more buys coming up this Friday. And the spots are limited at that price, but you can also become a full member, which I also put on sale for this as well, if you want more. If you want to see all my buy and sell alerts and all of my portfolios, you want to see my complete watch list with price targets, jump in on the free coaching, jump in on the free courses, have direct access to me anytime you want. There's so much, guys. Just check out the pinned comment down there and see which membership is right for you. All right, so there are three big things that matter on this earnings, and I know there's actually more that matter as well, but I'm talking about the big three here that I'm looking for at these earnings that are going to determine how SoFi moves over the next quarter. So let's jump into these next. Then we'll go over my plan for SoFi and how Wall Street's going to try to screw you in the end on all this. Don't worry, we'll get to all of it, guys. So the first thing that matters is, do they continue to be profitable? I know this one is the easy one to me as well. I agree, but not everybody is sold on the fact that they're going to be able to maintain profitability here. That's why I put it right up here, and that's why I put it as the first one, because it's definitely the easiest one for them to hit. In my mind, this company has executed 10 or 11 straight quarters of not only beats, but really beating beats and then giving higher guidance there. So they are clicking on all the cylinders, and I have no reason to believe that this would not be another profitable quarter, because if it wasn't going to be, I think Noto and team would have absolutely told us that last quarter. But I also have to be realistic and understand and relay to you guys that until you do this, 4, 5, 6 quarters in a row, there's a lot of analysts out there, because they've seen it happen in the past, that just aren't going to believe that you're going to be able to sustain profitability, basically be, profitable from here on out. You got to kind of prove it to a lot of folks beyond just one quarter. So I know that doubt is out there, and there's no doubt in my mind that they're going to absolutely prove those people wrong, but I can't say it's not a legitimate thing to look for, because there is no guarantee that there's going to be profitability there. And until it's been more consistent, I understand that there is some negativity out there. So that's okay. I think they're going to hit it. There's probably always going to be skeptics, but I think they get over this hurdle no problem. Number two, what is the impact of student loans? Now, we had yet another round of student loan forgiveness, and I'm not going to get into the ins and the outs of all that and all the other ramifications of it and everything else that's going on around it. Don't care. But I do want to know is, and I'm sure management will get asked at some point in time, what is the impact for them in regards to that, if any impact at all? It's something that has to be addressed. Not only that, we need to know, how is the impact of them finally being able to see some of the refinancing of the student loans and some of the other things that are good news for SoFi? Where are we at in that process? Is there a change in guidance for that? Are they on track for what they already guided to? All those questions are going to come up from the analyst there, and they need to be answered by SoFi. I agree, it is not the driver for the stock anymore. As a matter of fact, as we saw, it could basically go completely away, and it wouldn't be a big deal at all for SoFi, given how they've completely transformed the business to deal with that problem whenever student loan moratorium was going on and everything else like that. So I agree, it doesn't make a big impact to me either way, but it is something that investors are looking for. And again, these Wall Street guys, they're dummies sometimes and they just take time and they're going to want to know those answers. And of course, they're going to move the stock accordingly based upon those answers in some cases. So it's something we absolutely have to be watching for, and it's something I will be watching for. So on to the last thing that I'm looking for on this earnings call, and it's the biggest thing, and it's going to have the biggest impact on the stock price more importantly. So let's jump into that one next. And that would be, will they continue the beat and raise strategy? Look, they have basically implemented the same exact strategy for a long time now. They basically beat expectations and then raise guidance, kind of rinse and repeat over and over and over again. And I absolutely love it. But we got to know, are they going to do that once again? Because it's kind of what Wall Street is expecting them to do. Remember, in the end, they want to know what's the revenue, what's the profitability, and then what's the future growth going to be? Basically, are you on track or not with those future growth rates? And are you going to raise it? So the question becomes, do they continue this trend and this strategy of, I wouldn't call it sandbagging, but essentially sandbagging the numbers, then beating them significantly, and then giving us a nice raise there on the back end? If they continue that up, it is very positive for the stock, and it's going to create some positive momentum for SOFI. Doesn't mean it's going to rocket ship to the moon or anything else like that. But if they just give us a regular beat, like they've always given, but they don't really give us the beat and the raise in guidance there, it kind of signals something else, and it may signal something else to investors as well. Now, of course, that's why we listen to the earnings call, so we can dive into that and see exactly why they didn't raise that time. Maybe they're going to sandbag and they're going to do every other quarter. We really don't know at this stage what the strategy is actually going to be, but it's definitely something that I'm going to watch for. Do they follow that same pattern, or are they going to settle in now that they're profitable, of trying to give maybe less sandbagging per se and more realistic projections moving forward? Kind of seeing, do we see that switch in earnings strategy from one side or the other, or do they continue with the beat and raise kind of strategy that they've been using? So yes, in the end, I'm right there with you guys. I think they beat on all the numbers across the board. And I do think that we get a little bit of a raise in guidance, maybe not across the board raise in guidance, but they're absolutely going to raise guidance on certain things that they're seeing that are improving, accelerating, and it just kind of seems to fit right in with how they base earnings. So what is my plan with SOFI stock? Well, we got the Palantir repeat that I thought we would have, that we talked about last quarter. We got exactly that this quarter. We're essentially, hey, profitability, everything runs great. First quarter of profitability, they run it up a little bit, and then they just beat it down into oblivion, just like they did with Palantir a year ago when they had surprise profitability and ran it up and then beat it down into oblivion to where, basically now Palantir is on the rocket ship back up the other way. So for me, I'm going to be looking at that guidance, seeing if I need to adjust my price target any, so that way I can continue to add shares, assuming that they're executing and assuming that I really like the guidance that they pull forward, or that they push forward to us in regards to the stock. Now, you guys know I've been basically modified doing my DCA for my group. All I did was just say, hey, I'm going to pick a couple stocks I think are, indiscriminately beaten down for no good reason, Google and SoFi, and I'm just going to DCA them into them for over the next month. I don't know. I mean, we may be on 2 months now of doing that DCA. I'm not real sure now that we say that. It feels like it's been a while. But nonetheless, I'm probably going to actually wrap that up, go back to my normal modified DCA after that, especially if we get a big run here in SoFi. Now, I will say this. If we have kind of weak guidance or no additional guidance, it's barely a beat, and then the stock runs up to, I don't know, $15, $18, $20 or so, at that stage, I know it's kind of a hype run, and you need to be very careful in those situations to not FOMO into the stock. I'm not saying that it deserves to be at $7 like it is right now, but it also doesn't mean that it deserves to be at $20 right now either. And so you've got to be careful with that. So for me, I'm going to be very diligent, set my price target based upon these new earnings and my plan for my overall portfolios there. And then I'm going to move forward with buys as they hit those marks. But if you buy into that hype run, let's just say it jumps up to, significantly after hours, and over the course of the next couple of weeks, it runs way up there. You're putting yourself in a situation where if you chase that FOMO, you are going to be in for a rug pull at some point in time. And that really hurts. And that's also why we talk about building out positions early in these growth companies, because I built out most of my position in SoFi in 2022 and coming into 2023 a little bit. I didn't need any more SoFi. I was able to get it in 4 and the 5s for, it seemed like a year. It wasn't that long, but it seemed like we had a long time to buy at those levels there with the company performing on top. So I happily built out my position then. And that's exactly how you avoid being in that situation where you got to make a decision. Do I FOMO in? Do I wait? Is it going to go on a Palantir style run? Does it not? I mean, to me, it's not worth what Palantir is right now in regards to what they're doing, what their performance is, and what their growth rates are and everything else. But that also doesn't mean it's not a great company that you shouldn't add to later. And of course, if Wall Street gets dumb and goes to screw us, which we know they like to do, we'll talk about that here in just a second, I am going to be absolutely ready to pounce and buy more shares. So what exactly is Wall Street looking to screw us on with SOFI stock? What exactly is the warning I'm talking about? This particular warning has been my biggest problem with SOFI from the start. It is my biggest concern with SOFI, and it's absolutely out of my control. I cannot do any analysis to stop it. There's nothing I can do. It is 100% in Wall Street's control, and that is if they decide to give SOFI a traditional bank multiple instead of more of a fintech multiple. If they do that, the stock is actually overpriced today at its current price. I'm sorry, you guys come here for the truth. I'm giving you the truth. If that's the multiple they choose to use, it is overvalued at this stage. Now, if they go with a fintech multiple, opens up a wide range of possibilities there. And I don't think they're going to get a full fintech multiple, nor do I think they should. I think they should get a hybrid of some sort. But in regards to the stock, I don't determine that. You guys don't determine that. My opinion on it means jack squat. Wall Street determines this. And so that is the risk factor with the stock. That is the warning that I have, is that they just decide, hey, we don't believe it should get anything more than a bank multiple. It's just any other bank. It's just a bank, just like any other bank. We are going to be in for a lot of pain with the stock for a long time. Again, I believe they're going to get some sort of a hybrid multiple. I'm not making my projections based on a full, fintech multiple either, because I think that's unrealistic to the upside, just like I believe coming all the way down and, basically using the same multiple as you would for JP Morgan is not realistic either for SOFI. But it's something I wanted to address with you guys and make sure you understood those risks. And remember, if you don't know how to get a valuation or how to plan for a stock, how to do due diligence or anything else like that, make sure you check out the pinned comment for my group, where members get access to free coaching on that, free courses on that. You get direct access to me anytime you want, and our 6, 7, and 8-figure Discord out there with those members all helping you out as well. Plus, you get access to 3, 4, 5 videos a week that I put out in my group, not here on YouTube at all. We do live Q&As. We just did Tesla's earnings call last night, live in real time, just simply for members there. You get to take part in the $250 portfolio challenge, along with our experts who are also participating with us and posting their buys and their plan and everything else in there as well. And of course, you can also take on the $15 founders tier there if a full membership's not right for you, but you still want to participate in the challenge and see if you can grow your portfolio out to 6 figures and beyond using the challenge as well. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.